points, neither here nor there. Mahesh Patil is Chief Investment Officer at Aditya Birla Sun Life Asset Management Company. He's a market master of the day. Mahesh, good to have you with us here on the program. Thank you very much for your time. And let's just start with IT there, with the mid-cap IT companies all still reporting good numbers and sounding confident about the future as well, the next few quarters. LTTS, for example, this morning saying, well, if there is a sharp slowdown, maybe we'll see a slowdown in that particular quarter, but otherwise the drivers are pretty solid to continue to drive good growth. And that's a space which the institutional sort of investors were largely underweight on. How is the view changing, if at all, Mahesh, at least at Birla?
Yeah, good morning. So in IT sector, we have been a bit cautious running into the quarter because this is a quarter where one would have got a good guidance in terms of how the growth outlook will pan out in the concern that we are seeing a slowdown in the US, and especially in the discretionary spends have seen an impact over there. But as we look at the numbers, while there has been some downgrades from the large names, but by and large, we think that this is a transitory phase, right, for next 1 year. And I think overall, over the next 2 to 3 years, if we take a slightly longer term view, then we think structurally, I think the spends which are there on the digital side, I think will continue. And the industry will still probably grow at around close to, not probably high teens, but in low teens thereafter. So, and there have been some margin pressures, okay, which we have seen in some of the IT names. So, but there again, I think our view is that the pressure which is there on the manpower side and the wage cost inflation, that is kind of moderating down. So margin should also be within a particular band. So overall, we see growth slowing down a bit, but except for this fiscal year, post that, we would expect growth to be somewhere around, low teens. And it could be a relatively good sector to look at, though not very exciting in terms of the growth, what was there in the last 2-3 years, but a kind of a moderate growth, stable margins, good cash flows, good dividend yield. So we're kind of neutralish on the sector at this point in time.
Got that. By the way, should keep an eye out on Bajaj Finance. It is the nifty winner, and now it's adding on a little more momentum, 6,200 on the stock with a gain of about 2.5%. Mahesh, morning. So let me actually ask you about the lending business and what you're more convinced on. I mean, across the board, I think all the top tier companies, whether it's banks or NBFCs, we've seen very strong credit offtake, loan growth basically. We saw that with ICICI Bank. We saw that with Bajaj Finance. The only question is whether the market is willing to be a little charitable in case margins fall, which is something that Bajaj Finance kind of hinted at. Today, the market's lapping it up, doesn't seem to have a problem. But what is your house call on lenders, both the bank and non-bank, and which category would you prefer?
Yeah, so on the banks, I think the numbers have been fairly strong. They have been benefited because of the increase in the repo rate, and that has reflected in the terms of the margin expansion, what we've seen. I think our view is that the whole rate increase cycle is now behind us. RBI has paused, and we don't expect any further rate hikes from here on. Though we would still expect that the rates will not also come down too soon. We expect them to remain at least until this fiscal year. So in this backdrop, from the banks, you could see some kind of a margin contraction as we move forward in the second half of this fiscal year. But again, the overall net interest margin should still be higher than what they were a year back. So we don't see that as a challenge, and market is already factoring in that. And on credit growth, though, we think that last year was a fantastic year in terms of credit growth, around 15% kind of a growth for the overall industry. That will moderate down because we're seeing the overall WPI inflation coming out dramatically in this fiscal year. So while the real-term GDP will grow, but nominal GDP growth will be much lower. But still, it should be around 11% or so. So banks, I think, will continue to be steady. NBFCs is where I think because of the now pause in the rate increase, I think the hit on the NIMs, I think that will now be behind us. So we don't see, in fact, the impact on the net interest margins for the NBFCs. I think you'll see that turn around from this quarter, next quarter onwards. And that should be positive for a lot of the wholesale lenders because market was initially factoring in one more rate hike. So I think incrementally, I think some of the NBFCs would probably do better in terms of growth or profit growth compared to the banks in this fiscal year. So there could be some shift from banks to the NBFCs, especially the better quality NBFCs, which have got a good pricing power. And we expect overall the NPA cycle to remain fairly benign. We are not seeing any stress at all.
Hi, Mahesh. Morning. I wanted to ask you about the pharma pack. In the last 1.5 months or so, actually, that's been a relative outperformer after doing absolutely nothing in the last 5 years. Maybe it's the rub-off of a new IPO coming in from that space, Mankind Pharma. The response has been fairly mixed, I think so. But what's your view on the pharma space? You're cautious on IT. The other defensive we normally look at is pharma. Has its time come, or still there are challenges?
Yes, so the pharma sector, I think if you look at the real pain point has been on the US market, especially the US generic space, which did well during the COVID period, but in the last 1 year, we have seen again the impact of price erosion impacting the sales growth over there. And obviously there were issues about plant issues from as Fed inspection has again restarted. But I think at the margin, I think the sector looks fairly attractive in terms of valuations. I think valuations are at long-term averages. The reason to be slightly more positive in the sector right now would be that the US generic space is seeing some kind of a bottoming out in terms of the pricing pressure. There has been some kind of a shortage we have seen that has led to some increase in a few of the generic prices. But I think over a medium term, we are seeing some consolidation now starting to happen in terms of on the supply side. There have been some M&A activities, and that could mean that the pricing intensity will come down, and that should be good. That's what the market probably is looking at. And the domestic sector has been fairly steady. I think last year was a not so great year because the COVID base was high. Now that base is getting normalized. So you will see the domestic growth also probably in line with the long-term average growth, which is around for the sector, which is around 10 to 12% in that rate. So by and large, I think overall the sector should do fairly steady in terms of earnings growth, and valuations after the underperformance are also reasonable. So we are very positive on the pharma sector, and you could see some sector rotation playing out over there.
No, got that. By the way, GNFC is down 1.33%. Let's pull these up. GMDC is down almost 4%. Gujarat Alkali is down 4%. So a lot of these names, GSFC is down 1.5% as well. At least for now, all of these stocks are lower. RVNL is the other one, star mover over this week, still up some 40%. It's down 2.5%. This is a small space for a very large fund like yours, But do you own any of these names, Mahesh? Any thoughts, or would you like to get exposure here? I'm talking about railways, sorry, the railway infrastructure names.
Yeah, so we don't have much exposure because there are very few names over there. And some of these companies, especially in the PSU side, while they have got some kind of a monopoly, but not a very strong competitive advantage really to look at. I think some of the kind of run-up what we've seen is not essentially on the domestic story, while in the budget we have seen railway has been a focus area, especially on the rolling stock side, not so much on the infrastructure side. But I think there are some export orders, which could open up opportunities, probably what's driving that. But again, this is a space, where we haven't had much of an exposure except for a few stocks. So, we don't. So some of these PSUs, we are not seeing them to be having a sustainable long-term advantage.
Got that. Mahesh, good talking to you as always. Thank you very much for stopping by today. We'll wind up on that note and look forward to our next conversation.